Hello and welcome to this February 5th, 2011 video version of InvestEd Central's Anatomy of a Trade. I'm Tom Boley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you this week's Anatomy of a Trade. This presentation is brought to you by StockCharts.com, simply the web's best financial charts. Well, taking a look at this chart, this is Melco PBL Entertainment, ticker symbol MPEL. This is a $3.8 billion consumer discretionary company. We actually sent this out to our members as part of our Chart of the Day service. Each and every day we have one chart that we put out to our members. Both our silver and gold members receive this chart. And sometimes it's for educational purposes, but also it can be used for trading purposes. And this particular stock, you can see, had MPEL had risen up to about $7 back in early November. Pulled back for a couple of months, maybe a month and a half, and then started making a move again. And you can see in early 2011 made that breakout above $7. Volume started coming back in, but as it moved up, a couple of things. Number one, the MACD was pointing straight up. That's always a good sign. Tells you that the bulls are in control. The short-term moving average is pulling away from the long-term moving average. That's exactly what you want to see when a stock's moving to the upside. Now, it doesn't mean you want to rush in after the stock's made a big move, but what it does tell you is that the bulls are in control, and generally, when you get a pullback in that situation, it can represent a great opportunity to move in for a short-term trade. So I think, from our perspective, what we do at InvestEd Central, this one really set up well, because after this MACD moved up, you can see it was very, very overbought. We had the RSI up in the 80s, we had stochastics in the 90s, and just very stretched MACD. So the stock needed a pullback, and we got that with this long move down. Now, the thing I really liked about this particular candle is that you can see this tail on an intraday basis went all the way down to $6.75, which was below the breakout level and below the 20-day moving average. But notice by the end of the day, the bottom of this candle body tells you where it closes. We actually closed above the $7 price support and above the 20-day moving average, which was sitting at 704 at the time. So it was a perfect setup because the amount of risk to the downside was limited. We want to watch this price support and the 20-day moving average support, and we were able to identify this stock when it was trading almost exactly on both of them. So we didn't have a lot of downside risk, and what we looked for was simply a return back to this 780 area, which is where we had printed the high candle body previously. Notice 2 days later, MPEL went right back up to this area. Actually, I think got as high as 785 and then failed, came back down. But at that point, we had already hit our target, and we were long gone with a 10.3% profit. Now, notice on this last push to the upside, look at where the MACD is now. So before, when we were riding up, you could see the MACD was going straight up. Everything looked great. On the most recent attempt to break out, now you've got a negative divergence in play. So MPEL, I think, was a great trade short term, getting the stock at a clear support level and then exiting at a clear resistance level. And that's really what you want to try to do when you trade. The Anatomy of a Trade is designed to communicate the trading style of InvestEd Central. We use technical analysis tools to determine the appropriate timing of entry and exit points on stocks to maximize returns and minimize risks. For more information on the types of services we offer, please visit our website at www.investedcentral.com. Again, that's www.investedcentral.com. Happy trading.